Australia's financial crisis, causes and consequences. Australia, often lauded for its stable economy, has experienced several significant financial crises throughout its history. Despite being one of the most resilient economies in the world, the nation has faced challenges that have had lasting impacts on both its financial system and its society. In this video, we will explore the causes and consequences of these crises, focusing on pivotal moments that shaped Australia's economic trajectory, as well as the lessons learned. The early years, a fragile start. Australia's financial landscape has been deeply intertwined with its colonial past. When the British first established the colony of New South Wales in 1788, it created the foundations for the Australian economy, which was initially heavily reliant on exports such as wool, minerals, and other agricultural products. However, financial instability has marked the history of this young nation, particularly in the early years when the economy was dependent on volatile global markets and struggled with limited institutional safeguards. The first financial crisis, the 1890s Depression. Australia's first significant financial crisis came in the 1890s, known as the 1890s Depression. This economic downturn was caused by a combination of factors, including an over-reliance on borrowing, speculative land investments, and a sudden drop in agricultural prices. The banking sector had expanded rapidly, and when the real estate market collapsed, many banks faced insolvency. As a result, Australia's first major financial panic ensued, culminating in the failure of several banks and businesses, and a long-lasting recession. One of the key causes of this crisis was the overexpansion of credit. Australia, like many other economies, was swept up in a global economic boom. However, the boom was built on unsustainable practices, including the rapid expansion of credit and reckless lending by banks. When global commodity prices fell, the Australian economy contracted sharply. Unemployment rates soared, and many families were left struggling. The impact of this depression had long-lasting social and political consequences, including the emergence of labor movements and the eventual formation of the Australian Labor Party. The Great Depression, 1929 to 1939. The next major financial crisis Australia experienced was the Great Depression, which started in 1929 and affected nations worldwide. Australia's economy was hit hard by the global downturn, and the country faced significant economic distress. Australia's overdependence on exports, especially agricultural goods, meant that when international demand plummeted, the Australian economy was left vulnerable. The collapse of international trade, coupled with falling commodity prices, led to widespread unemployment and economic contraction. The financial crisis saw the Australian banking system under severe strain, with many banks collapsing or merging to survive. The Great Depression also led to widespread poverty, and many businesses failed, exacerbating the economic downturn. This crisis brought the concept of economic management to the forefront of Australian policy debates, leading to the establishment of more sophisticated economic frameworks and government interventions in subsequent years. The 1970s and 1980s, the banking crisis and recession. In the 1970s and 1980s, Australia faced yet another wave of financial crisis. This period was marked by several economic shocks, including high inflation, high unemployment, and a sharp downturn in economic growth. These shocks were partly triggered by global oil crisis, which caused energy prices to skyrocket, thereby impacting businesses and consumers alike. During the early 1980s, Australia's banking sector also faced challenges, primarily due to the emergence of uncontrolled lending. Several smaller banks and financial institutions were involved in risky lending practices, particularly in the real estate and agricultural sectors. This culminated in the failure of several banks, most notably the State Bank of Victoria in 1990, which was one of the most significant financial collapses in Australian history. The failure of these banks sent shockwaves through the Australian economy, triggering another recession. The early 1990s recession was significant due to the collapse of the real estate market, which had been inflating due to speculative investment. The excess lending by banks, combined with the overvaluation of property prices, led to significant losses for financial institutions, which in turn caused widespread layoffs, business bankruptcies, and a drop in consumer confidence. The government, at the time, responded with fiscal stimulus measures, such as government spending on infrastructure projects, and with policies aimed at financial deregulation. This period was a turning point for Australian economic policy, leading to a focus on modernizing the financial sector and making it more resilient to future shocks. The 2008 Global Financial Crisis, GFC. Australia's most recent and perhaps most well-known financial crisis was the global financial crisis of 2008. While the country did not experience the same level of damage as other nations, the GFC tested the resilience of Australia's financial system and exposed vulnerabilities that would affect the nation for years to come. The GFC was primarily caused by the collapse of the United States housing market, which led to the failure of major financial institutions and the subsequent global credit crunch. Australia was not immune to the global fallout, but the country's banking system was relatively insulated due to its strong regulatory framework and conservative lending practices compared to other nations. Nevertheless, the GFC's ripple effects were felt in Australia. Financial markets were volatile, and the Australian economy contracted as global trade slowed. Australia's mining industry, a key economic driver, saw demand for commodities like iron ore and coal decrease sharply, leading to job losses and lower tax revenue. In response, the Australian government introduced an aggressive economic stimulus package, injecting billions of dollars into the economy to boost domestic demand and keep unemployment levels in check. The GFC also led to a significant shift in Australia's financial regulations. The government and central bank introduced a series of measures to safeguard against future crises, including the establishment of the Australian Prudential Regulation Authority, APRA, which oversees the country's banking and financial institutions. The GFC further cemented Australia's reputation as a stable economy, but it also highlighted the risks of global interconnectedness and the vulnerability of even stable economies to global financial shocks. The causes of financial crises in Australia. Several common themes emerge when examining the causes of financial crises in Australia. Key factors include excessive borrowing and speculative investment. In many instances, Australia's financial crises have been precipitated by unsustainable borrowing and speculative investments in sectors like real estate, agriculture, and mining. The overextension of credit leads to asset bubbles, which, when burst, trigger significant economic pain. Global economic shocks. Australia's economy, while resilient, is not immune to global market forces. Economic downturns in major trading partners, such as the United States, China, or Europe, can lead to sharp declines in commodity prices and reduce demand for Australian exports, leading to financial instability. Banking sector vulnerabilities. Australia's banking sector, while generally well-regulated, has occasionally been vulnerable to excessive risk-taking, particularly in lending practices. This has led to several instances of banking sector instability, such as the failures of several banks in the early 1990s. Inflation and external shocks. The 1970s and 1980s saw Australia's financial system strained by high inflation, high energy costs, and the collapse of global trade. These factors contributed to economic slowdowns and heightened financial stress across the country. The consequences of financial crises in Australia. The consequences of financial crises in Australia are far-reaching and often long-lasting. In the short term, recessions result in higher unemployment, falling wages, and lower consumer spending. The collapse of businesses, particularly in the banking and real estate sectors, causes massive job losses and deepens public debt. Long-term consequences include significant shifts in government policy and economic regulation. After each major crisis, the Australian government has implemented new policies aimed at stabilizing the economy, ensuring financial stability, and preventing future collapses. These reforms include the establishment of stronger banking regulations, fiscal stimulus measures, and changes to the taxation system. Additionally, These financial crises often lead to increased public distrust in financial institutions and government economic policies, fueling political instability and influencing national elections. Socially, they often exacerbate inequality, with vulnerable groups like low-income earners, renters, and small business owners suffering the most. Australia's financial crises have shaped the country's economic and political landscape, revealing the vulnerabilities in its economic system, while also showcasing the resilience of its people. From the 1890s depression to the global financial crisis of 2008, Australia has endured significant economic challenges, each leaving its mark on the nation's history. However, the lessons learned from these crises have made Australia's financial system stronger and more resilient, positioning the country to better weather future economic storms. The key takeaway is clear. While Australia's economy is robust, it must continue to evolve, adapt, and strengthen its regulatory frameworks to mitigate the risks of future financial crises. Thanks for watching. If you enjoyed this video, please like, subscribe, and hit the bell icon so you never miss an update. Drop a comment with your thoughts, and I'll see you in the next one.